Hello, Callum. Nice to see you again.
Thanks, Woods. Good to be with you.
Good, good. Now, today you are reporting on some happenings from last week. Actually, you went to a an AGM. Is that right?
Yeah.
Um,
Yeah. So, sorry, I'll just to elaborate. I went to the
yeah, that'd be
the
good.
Lion AGM, which is the annual general meeting of Lion Selection Group. So they're a junior miner focused fund run by my friend Hedley Widdop. But part of the reason I was there was to hear from Hedley, but also from one of the stocks in my portfolio. So the CEO of the firm for
One
Australian
of
Small Cap.
your Australian small cap investigator picks, right?
Absolutely.
Yeah.
And I walked away really excited. The stock in question is Brightstar. They're the gold developer. Um, they're put together three different projects. So they've got 3 million ounces on the books, and part of their strategy is to become a potential acquisition target. And so the reason that's interesting is this week we saw Northern Star swallow up or move to swallow De Grey Mining. That's a very big transaction. That's $5 billion transaction. But um, part of the reason I wanted to go see Hedley and the guys at Lion is they have their famous Lion clock, which we'll put up on the screen. We'll get Cam to put that up so you can see it. Now, at the moment, it's pointing directly at mergers and moving into acquisitions. So that Northern Star move is bang on cue with where the clock says we are in the overall mining cycle, and the place to look is gold because there is just an ocean of money going through that industry right now.
Yeah, it's something James Cooper's been talking about lately too. His latest monthly at Diggers and Drillers was all about the takeover trend that's sort of emerging. But Callum, you highlighted in your piece, you highlighted Hedley Widdop's contrarian perspective, noting how Lion cashed out at the top and is now buying at 50 to 90% discounts. Like, what can you tell us, like, what specific market conditions or indicators that's convinced you to be now's the time to be scooping up junior miners?
Well, just to go back for if you're watching this, in 2022, lithium,
Yep.
nickel, all those stocks were absolutely roaring. And Hedley, he does presentations around the place. So I saw him there up in Queensland. Same thing. At that stage, the clock was pointing to the crash phase. Now, the clock was pointing at crash, but on the market, everything was absolutely booming. All right. So he's like, essentially, this has gone over the top. This is a predictable thing. Everyone's like the lithium stocks go way, way overboard. 2 years later, most of those stocks and lithium itself have completely collapsed. So the clock gave, and I wrote about it at the time in one of my issues, a fantastic warning that stay away from the junior mining sector at that point. And I, just by doing that, have avoided a lot of trouble. Most of the worst losses in the bear market that we went into came from the mining sector, especially the juniors. Then the whole thing fizzled out. Electric cars have gone off the boil, the sales in the West. Lithium has collapsed. The Australian nickel industry's collapsed. So it's just been a disaster zone. The best thing to do was to stay away from them all. But things change. Everybody gets wiped out. Then those assets that are still good, all guys like Hedley and the fund managers now are going, oh, this is great. We've got gold at all-time highs and a great outlook for gold. All the stocks have been smashed. We can go buy them up for 50%, 90% down, which is exactly what all of us should be doing. And then the gold companies themselves are making so much money that they have all these resources to go up and buy the junior projects. So, I mean, the Northern Star deal is quite big, but there are stocks out there that are going to be on the hit list. So guys like James, our James, can go and find out and go, well, these are the best assets. Back them. See what happens.
Your comparison between gold and industrial metals like copper is interesting too, particularly the lack of price resistance from industrial users. How do you see that dynamic playing out in terms of both the gold price movements and the junior gold stock valuations?
Well, I guess, I mean, the most ideal situation you want to be in is when investors can extrapolate, future earnings in a very aggressive way.
Yep.
So gold is one market where that can happen, where theoretically gold could go to $10,000 an ounce, it could go to 20,000. We don't know. There is no necessarily a limit on that because it's what the market's prepared to pay, and we know that it's a global market with so much paper money out there that it could get bid up to very high levels. So that just makes the outlook for gold miners more compelling. When you're looking at something like, I'm going to throw it like Iluka or something that does mineral sands, that's very tied to production and, Chinese sales and that type of thing. That can only go so high before the buyers will go, well, we're not going to pay that. There's no money in our business. So that just makes it's another factor to consider gold. Not to say that you completely ignore the other metals, but gold is by far the most exciting metal right now.
Yeah, right. You mentioned you mentioned that recent drilling results are attracting funding back into the sector for private investors trying to evaluate junior miners. What key aspects, if any, you think of drilling announcements should they focus on beyond headline numbers?
Well, I mean, the point behind that is to say that when mining goes into a bear market, like it did from 2022 for the last 2 years, investors stop funding the juniors. They don't want to know about it. So that cuts off their funding. So they become conservative. They pull in their drilling campaigns, they preserve cash, and they just sort of survive the winter as it is. Now that investors are excited about gold again, they're willing to back the gold companies. And Spartan Resources just raised $200 million this week, which is a gold developer. So that allows them to go on and drill their deposits, which in turn creates the news flow that the market wants to see to get excited about the stock. So what a lot of the juniors are doing now are going to either new projects or old projects and drilling out more holes so that they can give the market more data and go, well, we think there's more gold here than what the previous owners or holders did. And that creates the share market dynamic where you can get a big rise in a junior developer like Spartan over the last, which has been an exceptional case, but it was 30 cents last year, now $1.40, because it has proved there's over 1 million more ounces at its project than what the market previously knew. It can only do that because it got the funding to put the drills in the first place. Yeah. So it's a really exciting time to get involved in the gold sector.
Final question. I know we talked about the Northern Star De Grey merger or takeover. So obviously there's a trend happening there, and you agree with that. And it obviously suggests that the major miners are seeing real good value in certain juniors. How do you see the M&A trend playing out across the sector? And crucially, what characteristics do you think would make a junior a good target for a bigger fish?
Well, yeah, I would expect this mergers and acquisition dynamic to last for at least another 2 years. So we have the Australian gold companies very cashed up. But we also have the potential for the North American gold companies to come in and get involved in the local scene. And I would say the most important dynamic is how many ounces do the targets have. So the gold company is only going to buy the asset if it's going to meaningfully add to their gold resource position. So that's part of my theory for Brightstar with Australian Small Cap Investigator is they have a large gold resource. So a bigger fish wants to come along, they're going to look more juicy than a one that's got less gold in the ground.
Interesting. All right, cool. We'll leave it there, Callum. For those watching, check out Callum's article today. It's the links there below. See what it's all about and let us know what you think. Thanks, Kels. I'll speak to you very soon. Actually, Christmas party time this week, so I'll see you in a couple of days.
Absolutely. Look forward to it.
Thanks for tuning in to FatTel Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.